think it's easier to teach someone with a construction background banking than teaching someone banking how to do things for new construction. So for myself, I was working for a home builder. Just so happened that a number of our customers at the time were into banking, specifically doing construction lending. And just through my relationship with them, they said, hey, look, you've got the construction background. Have you ever thought of doing construction loans? For new construction, get to know a builder. I've actually shadowed builders throughout their day. Once I get out of the building industry, just ask them if I could ride along, check out the job sites, check out the developments that they're in, see what their day-to-day looks like. To be really upfront about it, I think at least in the Northeast, the biggest challenge right now is supply. Of course, it'd be great if rates would come down, but what I'd really love to see is just more supply. For new people coming in, I think the biggest challenge is that pay. Is there going to be some sort of a base pay component? If I'm not having a great month, can I still afford to pay my student loans, my housing expenses, or is this business just too risky?
We've been doing this podcast for over 20 episodes now, and we've brought on top mortgage professionals to give you insights that help you grow your business. And we're going to keep doing that. There's just one favor I ask of you. It'll mean a lot to us if you subscribe to show your support. Now back to the episode. Hey everybody, welcome back to the Loan Officer Playbook, the podcast where we talk about real insights and strategies in loan origination. Today my guest is Jeremy Nieli. Jeremy is a mortgage loan officer at Univest, and he has over 20 years of experience in the business. Welcome, Jeremy.
Hey, Michael. Thanks so much for having me. It's great to be here with you.
Amazing. I'm excited to have this conversation because I don't talk to a lot of retail folks and folks on the banking side. So I'm very, very excited for this conversation.
Yeah, excellent. Me too. I'm looking forward to it.
Yeah. What drew you into mortgage banking?
Yeah, great question. And it's always an interesting answer, no matter who you ask in the business. But so for myself, I was working for a home builder, in the early 2000 time period. And just so happened that a number of our customers at the time were into banking, specifically doing construction lending. And just through my relationship with them, they said, hey, look, you've got the construction background. Have you ever thought of doing construction loans? And I hadn't, that was a new concept to me. But, they basically said, hey, look, we think it's easier to teach someone with a construction background banking than teaching someone banking how to do things for new construction. And so I'll give it a shot. And never looked back. I've been in mortgage business ever since then.
So it's like you were working in some sort of industry, in this case, construction, and then that industry happens to be one of the industries that need homes built.
Right. Yeah, and in the early 2000s, if you were a builder or a banker, it was just a busy time, of course, leading into the housing bubble. So, there was some opportunity out there.
Yeah. When I look at the business, there's builders, there's bankers, there's brokers. I realize I just said 3 Bs. And then there's like realtors and all these different components. Some people try to do all at once, try to morph into one or the other. But it's usually one component is so niche enough that you can spend your entire life being a builder and don't know anything about the banking side, or spend your entire life being on the banking side and don't know anything about the building side. But you have been on the building side and also on the banking side. Do you think being on the building side helped you be a better construction mortgage loan officer?
Yeah, and definitely. Because you'll find, and I'm sure with speaking with a lot of the loan officers you've spoken with, oftentimes we tend to specialize, in a certain referral group, just understanding the builder mentality. It's, different than what a realtor mentality might be in a lot of ways. Builders, very sensitive to their pipeline, in contrast to a realtor, the builder is actually putting their capital out there to build the house, so from a realtor's perspective, of course, it's their job to make that sale, but they're not actually paying for the house and then selling it. So there's a lot at stake for the builder. And, they're very choosy with who they want to trust to make sure that when settlement day comes, that they're going to be able to recoup their capital, because that's ultimately what gives them money to fund the next build.
Yeah. The builder mentality is so interesting, like you mentioned, and understanding it. But a lot of things also impact the builder mentality. Like regulation impacts the builder mentality. They have to worry about their pipeline, but they have to worry about, hey, can I get this construction site approved with regulators? Like, what are some of the trends that you're seeing in the home builder world, with regards to regulation and how are builders sort of like navigating that world?
Yeah, I mean, that's a super question, and it can vary so much, like depending on, the state, even the county and township. And, from what I'm seeing out in the field with builders is there is still some struggle there in terms of getting, certain subdivisions approved, adding on phases. It seems like there is a little bit of a push from local government to try to expedite more of it, more so recently, just because, housing demand in the Northeast has been fierce. It's still a pretty strong demand, even though a lot of metro areas across the South and West are starting to slow down a little bit. It just really hasn't let up here. And the bottom line is, there's just not enough supply for the demand.
Yeah.
So, but still, I mean, yeah, I mean, to your point, I mean, regulation is still a tough spot for builders. I've seen some projects take up to 8 years or more to get approval. So, and again, some counties, you might see that approval come in a year or less, but there's certainly a lot of regulatory hoops that builders, still have to jump through to get their projects approved.
Yeah. Last I checked, I saw that we have a 4.7 million home deficit in the US right now.
Wow.
And last year, I think like 1.4 million homes were built, which is quite small. I mean, thinking of a country of like 250 plus million people, 60% of the population of the US are going to be homeowners. So the supply is definitely not there. What do you think needs to change for there to be like more supply, for the supply to match demand in the construction side?
Yeah, I mean, that's a great question. And I think, back to what you said about regulation, and of course, there's certain things that you're not going to be able to get around, but in terms of timelines and trying to expediting some of the approval processes, I think that's key in opening up some more land that builders can develop, especially for affordable housing. It seems, at least in our area, there's been a gap there. It's like there's a lot of builders that are specializing in the high end. Profit margins are typically better there. But when it comes to, affordable housing, even townhomes, in southeastern Pennsylvania, they've pretty much doubled in price, I'd say, in the last, 5 to 6 years. So where maybe you could get an entry-level home, new home, townhome for like 150, 5, 6 years ago. Now that same townhome's upwards of 350 or more, as an entry-level sort of home in a lot of the newer developments. So, for a lot of folks with interest rates the way they are, that's a challenge.
I see. In the home builder world, many times I hear people say, well, regulation is not the problem. Like the problem is the economy. And some people say, oh, well, the economy is not the problem. It's like regulation is the problem. But I think like those things are so interlinked. In a world like today where, you have builders having to import building materials outside of the US and then having to face like all these tariffs. Have you seen the economic situations delay some of these projects?
Certainly during the pandemic, I mean that, you're definitely seeing a lot of shortages and backstops. From what I'm seeing with builders currently, they haven't expressed too much stress over tariffs just yet. I guess we'll have to see how all that plays out and which tariffs stick and which don't. But yeah, I mean, to your point, the affordability piece is a big part of it for builders, coupled with the higher interest rates. So it definitely causes a lot of challenges especially for first-time buyers.
Yeah. Do you think tariffs will play a role in the number of homes being built?
That's a good question. To some extent, it may, especially I think when it comes down to builders and looking at their profit margins, where can they make them, the most to stay afloat and hopefully turn a profit? Is it going to be in some of the starter home lower end subdivisions, or are they going to have to kind of stick more with the custom home category, that allows them a little bit more profit margin? So that's a really good question, but hopefully they'll get it sorted out. I mean, I think, it seems to me anyway that, the administration is aware that there is an issue with housing supply. How much of that has directly impacted the tariff situation, I'm not sure. But at some point, I think that's going to have to really play into it if we're going to, solve for the housing shortage that we have.
Yeah. It has to be all hands on deck. I think the economy has to step up, like all branches of the government has to step up, like even on the lending side. They're also a lot of loan programs, and you do VA loans too.
That's right. Yeah, the VA loan program, for veterans, I mean, it's an amazing benefit. It's 100% financing, no mortgage insurance. So, for anybody, but specifically for first-time buyers that are vets, I mean, it's a no-brainer as far as loan products go.
I've had a top producing mortgage broker tell me that VA loans are the best type of loans that exist. Would you agree?
I would agree 100%. And that's typically like, when I'm first talking with a borrower, that's, one of the first questions I'll ask is, are you a vet? Because, that wipes out like 9 or 10 follow-up questions when trying to determine the best mortgage product for them, that just kind of hits the nail on the head right there.
That's a great opportunity though, especially for people who just have to join the military, do some service, and then just have that for the rest of your life. Like that's a benefit that you're just going to have for the rest of your life. Would you advise people to go into the U.S. military so they could qualify for VA loan benefits?
That's a good question, and yeah, I mean that would certainly, if I was a recruiter, that would definitely be on my list of
Yeah,
things, to make it
yeah,
worth it for sure.
yeah.
Because I'd say like on average interest rates are probably about a 0.5% less as well. So, on top of the 100% financing, the better interest rate, the no mortgage insurance. I mean that's a huge savings. I'd say if someone was looking at a $400,000 house with all those savings combined, you could be looking at a $400 or $500 plus savings per month. So it's a good deal.
Yeah, yeah. You're making me wanting to go join the army now. Yeah. Um, and speaking of, all these different types of loans, we're talking about construction loans and VA loans. There is also even further diversity in how these loans are sourced, how they originated. You have the wholesale side, retail, mortgage banking, and all of that. What made you decide to be in the banking side?
Yeah, so good question. And that was kind of how I started out. The folks that I knew that referred me in did work for a bank. And and honestly at the time I was in my early 20s. So, it offered a base pay plus commission. So I wasn't ready at that point in my life just to go full commission. So
Yeah.
and most banks at the time, or pretty much all the ones I know of, were offering some sort of a salary, regardless of your closing numbers. So I thought, hey, this is a good way for me to get my feet wet in the business. I'm still going to be able to afford to pay my bills, if it's slow at first, while I'm trying to learn things and build a pipeline and referral sources.
Yeah. I wonder what the split is between loan officers that left the business in a high interest rate environment like that we're in right now, but in the last 2+ years, right, so you have so many people coming into the lending business, and then what rates were low, and then rates were going really high, and then all the commission only folks who were doing a couple of loans a month, and then business hit them really hard, and then they left the business, and some of them are coming back, but I wonder like how many of them left from the banking side or the wholesale side, because like the banking side, you're still going to have your salary running every month, so have a little bit of a security, if you will.
Right, definitely. Yeah, that's a good point. I have seen that with some of my peers. Some of them have gone from, more of a full commission, no base to a base plus. And depending on the bank too, there's draws involved. So even though you may be on a salary, there would still be a draw component, but you still have that base pay to carry you, through some of the slower times that you might have. But yeah, it seems like a lot of the bigger banks especially are moving to more of a fixed salary model with no draws, but with a smaller basis point for volume closed. So yeah, there's quite a myriad of different incentive plans out there right now for loan officers. I'd say, for myself, one thing I've noticed in particular, not in all cases, but at least, with the offers I've had, it does seem banks in general do seem to have a more comprehensive benefit package. And
Mhm.
again, some of the bigger brokers, they can match that too. But just in general, I'd seen that some of the benefits like 401k, a health insurance, if you're like the sole earner in your family and you've got to carry a spouse or some kids, then oftentimes, even though the BIPs might be less with a bank, you can kind of make it back on the back end, with some of the benefit packages that they offer.
Yeah, and would you say that there are fewer hands and that the fewer branches that the customer has to deal with when they're dealing with a bank.
Yeah, I guess from what I've seen, yeah. I mean, it does. There's a lot more in-house. Of course, the underwriting, processing, the servicing. That was a big part of it for me as well. Most banks, not all, but most do also carry the servicing for the loans too. So, when we've had refinance booms in the past, or just any repeat business at all, it just makes it a little bit easier, because they've already got the database ready to go. Typically, you've got a CRM or something. It's keeping you in front of those customers. I'd say, and brokers can certainly do a good job staying in front of their people too. It just might require a little bit more effort on their part, especially if the servicing gets sold.
Yeah. Brokers don't do any servicing except like there is some sort of like correspondence and
Right.
yeah.
Correspondence. But yeah, you're right. Yeah. For the broker world, yeah. Yeah, they really have to be responsible for their CRM. And that can work, as long as you're, consistent, and keep, good records, it can work. But it's really on you to make sure that you stay in front of your customers.
Do you think it's easier being a broker than a mortgage banker?
I would say in some ways, from what I've seen, it can be, so like for banks, typically, you're not going to have as many programs as a broker might have access to, because, banks oftentimes they'll have their own portfolio product or, of course, doing Fannie, Freddie, the government stuff. But because brokers can, reach out to a number of different wholesalers, they may have some more options for some, more unique situations that customers might have. So I think that's, for any loan officer that's looking at a bank, it's really important just to make sure that whatever product that you choose to specialize in, that they have a good fit for you. Because if there's not enough options, you're going to miss out on business. And in that case, if you're missing out on business anyway, then you may want to look at a good brokerage, that has some good options for their clients.
Yeah. On the flip side, though, I think, we might say, well, being a broker is easier than being a banker, and it's all relative depending on what you're thinking. But sometimes when you have a limited pool of programs, you tend to know so much about that program than when you have just so many different programs to focus on.
Yeah, that's a really great point. And for myself, looking to specialize in VA and new construction, as long as the bank had a good fit for those two main products, then I was happy. Because I know there is a lot of other programs out there, but to your point, I mean, if there's too much to look at, sometimes you're gonna miss the forest for the trees. So
Yeah.
yeah.
What advice would you give to someone who wants to specialize in VA and construction?
Sure. So, I guess for new construction, get to know a builder. I've actually shadowed builders throughout their day. Once I get out of the building industry, just ask them if I could ride along, check out the job sites, check out the developments that they're in, see what their day to day looks like, and understand what their pain points are. For instance, depending on the kind of new construction you're doing, oftentimes builders will finance the project the whole way through, and you're just doing that end loan, to take it out at the very end. So you're not have to worry about draw inspections, getting draws through, things like that. But what we're seeing is more builders these days, to try to keep capital more free, they are doing like a construction to permanent mortgage where there's going to be draws involved and they want to get progress payments. So, find out where their pain points are. If they've worked in the past with banks that couldn't meet draw payments on time or behind on inspections, you want to get ahead of that and, speak with your internal construction people, see what the process is and set the proper expectation. So if your draws typically go out in 5 days, don't sell them on 3. Just be smart about it and just keep open lines of communication. Because again, like the builder, they've got all their capital going into their projects, and even just missing a settlement or delay of a few days can cost them hundreds of dollars. They're carrying the complete cost, the taxes, electric, whatever else is going into that house. They're the homeowner until someone takes it over. So yeah, so just understand where they're coming from and discuss it with them. Discuss what they want to see for their.
Yeah, that's every part of the business is all about relationships, understanding people and getting to build as strong relationships as possible. I'm curious in the builder world, the residential world, you're still building relationships. Builders, they're a business, trying to build as many homes or as they can, or trying to get like permits. It's a different set of relationship building skill sets than, let's say, a residential home loan where you're talking to some veteran who has a little bit more time in on their hands to chat a little bit more, do you find yourself, actually, rather, I think the question is, what are some of the differences in the relationship building skills that you need to have to do residential loans versus like new construction loans?
Yeah, that's a great question. So, with the builders, I mean, there's typically a lot of consistency there. If, like, for instance, if they're working a certain subdivision or development and, you can get in good with that builder, you could be looking at potentially dozens of mortgages in that same community, versus like on the residential side. I mean, you're going to have working with multiple different realtors, sellers. They could be spread out across the county or the country. So like with the builder, it does kind of allow you to, have more consistency because you're typically working in a specific area. Like for instance, when we were talking about VA loans, some of the builders I've worked with had subdivisions very close to military bases. So a good chunk of their clientele were veterans. It just made for a great fit, and to be able to specialize in that. And with the builder, it made the builder feel good, made them feel very comfortable that, things were going to, go according to plan.
Yeah, I have not met many builders. And so I'm always curious how in the builder world people can build like these huge developments and just maintain them across not only like multiple states, but multiple different kinds of developments, like, different like condo units and some of them like even on the commercial side too, like building like commercial properties. Especially, I used to live in San Francisco, where at one point maybe 70% of all the office spaces in San Francisco were unoccupied, and some of
Wow.
these projects needed to be refinanced. How does refinancing look in the builder world?
Yeah, that's a really good question. So, typically it works out pretty well, because once you have a certain amount of sales in a community, you have very accessible comparables, so it can make it a lot easier. Now, because properties appreciated so much in the last few years, I'm not really seeing many appraisal issues anywhere, but in markets where values have gone down, a lot of those homes have held their value, which was, and, when you look at the last recession, I mean, that was key because, even though there was waivers on certain kinds of loans, if you were fortunate enough to have a loan with Fannie or Freddie, they might have waived the appraisal. But in other instances where an appraisal was required, it worked out really well for people in communities because of the proximity of the comps, and of course, the more recent sales too in a builder subdivision. So it can be very helpful when it comes to refinancing.
Yeah. Given that you do all different types of loans and you work inside of a bank, have you seen any sort of technological advancements that these banks are using to serve their clients better, or even to reduce the amount of time it takes to originate a loan?
Yeah, so that's a really good question, and so I have seen that of course, like an online banking app is standard now, but along with that, there's a lot of processes behind the scenes that can often pull pay stubs. Oftentimes users can get bank statements pulled through. If their bank is set up with the service. So advancements like that have helped a lot, compared to, paper. I mean, like I said, I got it in the early 2000s and paper was
Yeah.
standard. I mean, the internet was, it was a factor, but a lot of customers weren't on board yet with digital, of course. And so, you were processing a lot of paper statements and working with a lot of thick files. So the technology, that we have today in terms of making the process run smoother and faster has just been amazing. And from like a processing and underwriting standpoint, there's a lot of systems running behind the scenes. They can look for certain red flags. So there's just a whole amazing slew of data out there that's being aggregated to help us out.
Yeah, yeah. There's going to be a convergence with all of this technology because now people like you who have a lot of context in the entire process are becoming now much more valuable, especially in the world of AI, where you say, is technology on the underwriting side is like checking for red flags. You need like an expert to now even verify those red flags, right? Like You don't have like the human doing all the manual checking for red flags, but at the end of the day, you need that human that would come in with like a voice of reason and say, hey, this red flag's correct, this red flag's wrong, it's like good or bad. Have you seen like much AI in the banking world? We're seeing like quite a bit of AI in the brokerage world, but that's kind of different because, they're mostly originating loans, like some of them don't even fund their own loans. And so they have a little bit of a freedom to experiment with technology and AI. But banks, I would say, have higher stakes, from servicing to all these different like vertical integrated tools. Have you seen some AI implementation on the banking side?
I have not seen a whole lot of it just yet, but I have heard that it's being researched and, it should be coming. So I think banks are kind of, like you said, I mean, brokers seem to be kind of ahead of the curve when it comes to some of those technological things, perhaps for compliance issues or just steering bigger ships with banks, But yeah, so I mean, there's definitely been a push that I've seen to try to get ahead with AI because, as you know, it's vastly changing how business is being done. And to your point, I mean, of course, a lot of people asking and wondering, what does AI mean for my business, or will it replace my job? And it's a legitimate question. And, I think to your point, I mean, at the end of the day, there's going to have to be some human involvement, just to double check and make sure it's all there. So I think AI, I mean, will play a huge role as an assistant kind of function, and taking out a lot of the mediocrity, so to speak,
I agree.
getting some of the technicalities off the board. But honestly, I think you've probably got a better beat on that than me. So what are your thoughts on that?
Well, to clarify, I don't think I have a better beat on, the great replacement theory than you, because no one really knows what's going to be replaced. I do know how people are using it, though, into today's world, because we work with some mortgage brokers and wholesale lenders, and they're using AI in a lot of different ways. But where we're seeing the most pull is like that processing side, whereas people are doing a lot of manual checking. You talked about dealing with paper files like back in the day, but even like pay stubs that you were talking about, like even if you get like a digital pay stub, there still has to be some sort of like oversight that a human has to do and the underwriter has to do, and even the processor. And then on the wholesale side, like you have a processor, the process stuff, like the loan officer looks at it, takes it back to an underwriter sends back some information, goes back to the client comes back to the loan officer, goes back to the underwriter, and then you have this like game of, I don't know, like, I don't want to say game of chicken, but like the game that's being played. But what if, as a consumer, you will look at a loan program and then you apply for it online and every single requirement that you need is being surfaced to you. That way you don't have to, send some documents and then being asked for documents like later on. Like we're seeing that sort of like holistic review of files now based on the guidelines a lot more than before. Fewer touches of the loan, seeing that. And yeah, I mean, I'm seeing like the rich getting richer because people that are poised to have like that much loan volume are even closing a lot more loan volume now. Like people doing, dozens of loans a month with some sort of like AI augmentation. I'm not sure like who or what is going to be replaced, but right now that's how I see the technology being used.
Nice. Yeah, and what do you think have been some of the bigger changes you've seen? Like, like you mentioned, some of those higher producers, like from the origination front, like how do you best see it being utilized right now from that end of things?
Yeah, I think the lead gen side still needs a lot of improvement. Lead generation in mortgage is very monopolized towards like who has the attention of the customer at that time. So, I mean, you have some builders that are your friends,
Right.
and those are like your lifelong leads, right? So on the lead generation side, people are trying to like, the only way you can get new leads is like, okay, the person who's new is coming into the business or they switch from someone else. So to get net new leads, you either have to convince a lead that was doing business with someone else to do business with you, or capture someone the first time they're starting to think about, buying a home, doing business. So, and that involves like being in front of them, like the technology of being in front of them as much as possible right now works really well on text based. So some voice AI is like doing well, but I haven't seen someone who's doing that really, really well at scale. But on the processing side, I see it being used a lot more. And we work with large language models. These things are non-deterministic, but one thing that they're really good for is that they understand language so well. So you can give it like 1,000 pages of the Fannie Mae seller's guide, and it would
Right.
understand like all the requirements
That's
needed.
amazing. And
Yeah,
that's a piece I was interested in a lot too, because as you know, I mean, the guidelines can change sometimes on a daily basis, like there's
yeah,
always changing, So that's pretty cool and obviously key, to keeping up with the mortgage industry. So that's pretty neat.
yeah. It could potentially be used for training too, but that's a topic for another day because I don't know, do we need to be training more people to get into the business? Whereas, I mean, we need more originators for sure, but how many more originators do we need?
Yeah. Yeah, no, that's a great question, and it's a tough one to answer, and because there's been such big swings in the market, obviously, during the pandemic, I mean, like you said, I mean, you just couldn't have enough originators for the volume of people that were looking to do mortgages, and then of
Yeah,
course, there was this big vacuum, once rates went up, and it's tricky, it's tricky for new people coming in. I think the biggest challenge is, especially if they're looking to pay off student loan debt, is that pay, is there going to be some sort of a base pay component where I can, if I'm not having a great month, can I still afford to pay my student loans, my housing expenses, or is this business just too risky for me and I can't take a chance on it right now? So
yeah,
yeah. And I'd say like for people just starting out, if they want to get into mortgage, I think in general, banks do offer a good launching platform for that because they already have an existing customer base. If you're fortunate enough to work with a bank that has a banking footprint, they're going to have some customers that need mortgages. So you're able to get some more leads as you're starting out. Unless, of course, you've already been in a business where you know good solid builders, realtors that are going to start referring to you right out the gate. But I think from a banking perspective, there is a little bit of a launch pad, so to speak, as you're working on trying to nurture those other relationships that are going to help you be successful.
Jeremy, this has been a very fun conversation. What are some of the things that you're looking forward to in the next, 5 years in the business?
Yeah, so obviously it'd be great if rates would come down a little bit more, but to be really upfront about it, I mean, I think at least in the Northeast, the biggest challenge right now is supply. I've got a number of customers qualified over 6% that are ready to go. Some people that have been, looking for a year or more, and just haven't been able to find the right property. So I think, of course, it'd be great if rates would come down, but what I'd really love to see is just more supply. Because the millennials, many have put off home buying, household formation, but eventually that's really going to come to fruition. I think we're starting to see that now, and that's why demand is so high. But yeah, just that supply has to be there. So I'm hoping to see a little less regulation, some more land opportunities open up for builders, and of course some lower rates to boot would be great.
Amazing. Yeah, we will get there. We've started seeing some, trickling down of rates, trending down of rates. So over the next 5 years,
It's
hopefully
cyclical.
nothing crazy happens. I talk to some people and say, I've got one more boom left in me.
Yeah, yeah. When they
We've
hit, they make you busy. That's for sure.
Amazing. Jeremy, how can our audience reach out to you, sir?
Yeah, sure. So, my email is neelij@univest.net. Cell 717-333-6576, and hit me up on LinkedIn. Would love to connect with you.
Amazing. I hear that you're doing some more social media stuff, so hopefully we'll see more stuff from you. I'm going to put Jeremy's information in the show notes, so definitely be sure to follow Jeremy on his socials, connect with him on LinkedIn. Super, super knowledgeable guy on VA loans, construction loans, entire banking side. So, Jeremy, I hope you don't mind me saying I would like our audience to consider you as a resource if they need some information, and I'm hoping that you can provide it to them.
Yeah, most definitely. It'd be my pleasure.
Amazing. Well, thank you so much for coming on the pod again, Jeremy.
Yeah, thank you, Michael. It's been a pleasure being here with you.
Awesome. Great.